Welcome again. I am Professor Luchin, and this is Lecture 13 for Safety 380 Introduction to Occupational Safety and Health. In this lecture, I'm going to give a very brief overview of workers' compensation, specifically focusing on laws and information from Wisconsin. This topic could be an entire semester long course. So you're getting a very shallow, that's a bad term, a limited view of what it is, but it ties in very directly to what we've been talking about, building off of some of the concepts we covered in the a couple lectures ago for OSHA record keeping, and of course to the Bureau of Labor Statistics that we talked about as well. So again, what I'm going to really do, especially since I've got so many human resources and general business majors in this class, try to give you the listing of resources that are available. So depending on where your career goes, whether you're HR, general management, or even safety, that you can look these things up. Or if you go to another state, realizing that you need to look for and review and understand that state's laws. I'm going to talk a little bit about the claim process, costs involved, types of benefits that are afforded, different types of disabilities, all leading up to some considerations for fraud. But what I really want to focus on is the savings that can be achieved through an effective safety program, preventing workplace accidents and injuries that result in a work comp claim. And of course, take a look at the study sheet for this lecture and the next lecture in order to prepare for the quiz. And also, the materials provided will also be we'll test your knowledge for your weekly assignment. So this is just a simple graphic I found online. What is workers' compensation? And it's kind of it's multiple things. It is a state law. It is a form of insurance, and it provides benefits to injured workers, and it's considered exclusive remedy, which we'll talk about in a moment. And the benefits that are covered, as long as the claim is not denied, range everything from medical to lost wage if it meets certain qualifications, to rehabilitation, possibly re-education, and expenses. But there's also allotments, depending on state law, again, for death on the job. There may be money for surviving children and spouse. It just depends on the state. In Wisconsin, our the agency that enforces the work comp laws is the Department of Workforce Development, and all paperwork goes through the Department of Workforce Development. So they're the ones who express the statistics and costs involved with work comp here in the state, and I'm going to cover those later in the lecture. But here on the screen here, one of the questions is who is required to have comp insurance? And it's pretty much every business that has more than just a couple people, or a bigger group that meets for almost no reason and almost receives no pay. So if you're an actual business, you probably have to get work comp insurance. If you don't, you can get in trouble. If a worker is injured and their employer does not provide work comp insurance, the employee can actually, or the person who was hurt, go to the Department of Workforce Development website and find out how to report that. It will get covered by the state, and then their employer will be fined by the state. It's a law. It's a requirement. Another agency that I want you to be aware of is the Wisconsin Compensation Rating Bureau. They are the ones who set the policy class code rates, and they also calculate each individual company's experience modification rate, which is a really important factor when considering what a company will pay in annual premiums for their insurance policy. But also, it's another way to sort of a lagging indicator of a company's safety program performance. And you probably already read the screen, but it's basically the same. So let's talk about one of the main concepts, and that is exclusive remedy. Means that workers will receive payment and coverage for losses. In exchange, they will not sue their employer. This is not a black and white issue. There are circumstances in which an injured worker could sue their employer. They could sue the manufacturer of equipment, coworkers, all kinds of things, depending on what is evidence for negligence. Intentional tort cases can also be filed if the worker can show certain things. What's interesting, some historical perspective, but I want you to get this from the chapter, is that prior to workers' compensation laws, workers would actually have to sue their employers. So even though both employers say it costs too much, it's too intrusive to the business, workers say it's not enough, because like when you receive a lost wage benefit as an employee, it's only a percent because they don't take out taxes. So it's usually like 2/3. That's what you receive. And that's when you're not able to go to work. You have to stay home. In Wisconsin, there's a time period you have to wait, and you'll look this stuff up, of course. But the first 3 days after after the actual case, so the first day after you were injured, that you're off, you don't get compensated for the first 3 days. That's what sick leave is for. But if you are off more than 3 days, then you on the fourth day you would start receiving compensation. And if you're off past 7 days, you actually will get those initial 3 days. Kind of crazy, right? Well, let's throw in another wrench. Just as OSHA record keeping is based on calendar days lost or calendar days restricted, work comp is on a 6-day week. They don't count Sundays. So it's a little bit odd that way. But you're not going to be handling any comp cases right now. I'm just kind of giving you an overview. If this is going to be something you have to deal with in your career, you're going to need to check out the sites and the resources I provide to you. So 1911, that's when the first state work comp law was put in place. It was Wisconsin. And the first policy, I believe, was written by Wausau Insurance. Wausau Insurance does no longer exist. They were bought out by Liberty Mutual. I don't know how many years ago, a while ago. So that's just a little background for you. I think it's on the assignment. So here is the homepage for workers' compensation through the Department of Workforce Development. I'll be copying and pasting some things from each of the for workers, for employers, and for insurers. And you could just see it right here. There's information you could click on to answer some of the questions from the study sheet. The work comp laws for Wisconsin are housed under Chapter 102, and you can look this up as well. You can just see a few things here. And here is the homepage for the Wisconsin Credit Rating Bureau. And you can see here there's information for carriers, for agents, for employers. And there's an additional applicable chapter, which is 262. This is the rate regulation in workers' compensation insurance. So the Wisconsin Compensation Rating Bureau, they're covered by these state standards. So let's talk about work comp from an insurance perspective. Insurance is really just shared liability. That your risk of loss is assessed. An underwriter sets a premium that if you pay this annual premium, we will cover these losses should they occur. And sometimes there's a deductible that goes with it. So, overall things are covered, you pay a deductible. So, which is like saying you're going to pay the first amount, like for car insurance. I know some of you see those commercials like, Geico or the General or I forget what the other one is. There's like a completely electronic one. You can set your rate, but what coverage are you getting? What is your deductible? All these things are taken into account. But sometimes people say, oh my gosh, I only have to pay that much. Great, pay it. And then if you get into an accident, you're probably going to be more on the hook than you really thought. Some things may not have even been covered. So as you mature, through your career, it's good for you to find an agent who can explain it and lay it all out. That, okay, this is what you have. This is what it costs to replace. This is the potential cost based on what they have for data. If someone was to get injured, blah, blah, blah. So, in order to really protect yourself, this is what you need. This is what it costs. What are you comfortable with? What are you comfortable to handle for deductibles? Do you need additional layers like an umbrella policy? For businesses, they have to do the same thing, but it's a much greater layout. And you can see here there's 9 different areas here. So we're getting a little bit beyond the scope of this course right now. I just want to kind of bring it back to just the work comp portion, and that is that, depending on the industry, depending on the company, depending on where they're located, they have data to show what is an expected number of claims and what is the expected amount of claims that will come out of that company. And once the base amount has been set, then insurance companies, they can specialize in certain industries, that they have experts who can go into these companies that they're insuring and give them the knowledge and resources they need to mitigate the exposures that could lead to those claims. And in doing so, they file less claims, therefore there's less payment of claims, and then the insurer saves money, and then they can provide lower EMRs or possibly other types of benefits to those companies to keep them on, and then they see their annual premiums go down. So it's win-win-win as long as it's done properly. I could go on and on with this. And it also helps from a safety perspective to sell safety, and there are some consulting firms that's what they use. Here are how the premiums are calculated. They're calculated through essentially the the Compensation Rating Bureau. They set the policy code amounts. So each state's a little bit different. And what's interesting is you can actually go online and look at this stuff. Compare like Illinois, Minnesota, and Wisconsin, because we're all neighbors. That, like, say a roofing worker, or roofing labor, I'm not sure what the actual policy class code term is. It could be $28 per $100 income, or basically payroll in Wisconsin. You're like, wow, that's a lot. Yeah, in Minnesota it may be 25, in Illinois it may be 35. It depends on what the claim history has been in that state. That's how they set the class code. The experience modification rating is a long equation, and it's based on a rolling 3-year average performance of a company's comp claim. And it very much aligns with that expected versus actual. So if a company for 3 years, and it doesn't include the current year or previous year, so it's like 5 years back, 4 years back, 3 years back. So it's that 3-year time window that again rolls as you move into the future. If you have fewer claims and less amounts than what is expected, then over time your experience modification rate, or EMR, or the mod, it'll go down. And as it goes down, that multiplier, when it gets lower and lower below 1, is savings. They say that unity is at 1, so you're paying what is calculated. If it's above, you're paying more. If it's less, if it's lower than 1, then you have a benefit. It's lower. It's a savings. There are insurers and there are agencies. Agencies, like an insurance agent, will sell. They could sell one, or they can sell several different types of insurance. And because different insurers are willing to accept different types of risks, shared liability, and they have either the expertise in certain areas or not in these areas, and they want to make sure they make money too. They don't want to sell a policy to someone and then lose year after year. So that's how it all works. Real easy, right? So here's just what I just talked about with the experience modification rate. And over on the left, you got to look at some of the numbers and how it all works out. So if a company has an effective safety program, then they're reducing the occurrence of accidents, injuries, and comp claims. With less comp claims, you get a lower EMR over time. The lower EMR reduces the annual business expenses, the cost to operate the business for the same coverage. That's important. And then that lowers the annual expenses, and that increases profit. So that's how it works. Though it's not direct dollar to dollar, if you're good at accounting, you can show. So what do you do if somebody gets hurt? What happens? On the left here, I've got from the frequently asked questions portion of the DWD website, how do I file a comp claim? On the right, I've got you can. I have a copy of this form. It's the WKC 12 form, and this is the first report of injury. This is what has to be generated and submitted to DWD should a worker go to the hospital, emergency room, whatever, to see treatment. This will allow the comp carrier to be billed by whoever is providing the treatment. If you're, I found this online. This is from Aon. They're another insurer. Human Resources Guide to Work Comp. So claim filing, claim investigation, if needed, disability management, medical management, and then litigation management. So there's this whole, this is a life cycle of a claim. Most of them are medical only, a great majority. But when it becomes questionable and it becomes indemnified, which means there's some sort of additional benefit, wage, disability, rehab, things like that, it becomes more expensive. You definitely want to do medical management. You want to get the person's claim closed, that they've been deemed 100%, they can return to the job as originally assigned, boom, closed. But there may be litigation at the end as well, and that can drive up costs. As an employer, it's your responsibility to file the claim within a certain time period, so things are paid and the worker gets money if they need it. But an insurer can deny the claim because something doesn't look right, and then there's an investigation, and so there's some information here about that. And what they're trying to do is, provide payment for what was originally agreed upon, and sometimes there's a gray area, and sometimes more information is needed. Experienced companies probably don't have this issue as much. I know that this year there are comp claims for people coming down with COVID and having to stay home, not getting wage. Some people have filed claims for stress or an anxiety due to the job. Those sometimes are covered. It really depends on the situation. So how much do things cost and how much can be compensated? So I have over here medical, disability, death, wage loss. Like I said, most claims are medical only, and that's just the whoever's treating the injured worker, they bill the carrier and they get reimbursed. If there's disability, that's where we get into the disability types, and we're going to talk about that in a moment. There's a few terms you need to be aware of, and that is permanent versus temporary and partial versus total. And you can look at how much someone would receive from disability if you look at the PPD schedule. It means permanent partial disability. And that's under Chapter 102.52. And you can look that up on the DWD website. Right here, I've got the maximum wage and rate chart. This is Form WKC 9572. It's also housed under Chapter 102.49. Let's look at the first column there. As of January 1st, 2021, the maximum wage that they would compensate is a little over $1,600. They've got the weekly rate here, the daily rate, the maximum wage for permanent. So it's not, depending on where you are in your career, that may be, you may get the full amount or you may get a lesser amount. So the maximum annual wage, $82,000. The maximum death benefit is $328,000. Does that seem fair to you? I want you to think about that. Because some other types of disability claims can be millions of dollars, but a death right here is $328,000. There's money that can be paid to the spouse. There's payment to a children's fund. There's death benefits. There's burial expenses. And then there's money that goes into the state fund as well. But, you can see these numbers, they change over the years. And this chart goes all the way back to 2013. 2013, the maximum benefit was $263,700. And part of the assignment for this week is I want you to compare how much how much is given or provided as maximum for a death benefit versus a certain type of severe injury, which would be a disability. I want you to compare those. It's actually not funny how little death is valued versus loss of arm movement or of a digit or something like that. Here are the different classifications I talked about. Temporary total disability. That means the person has to stay home and recover. So there will likely be wage benefits under that classification. Over on the right, we have temporary partial disability. So temp partial means they're going to recover and they're probably just working with restrictions. So they probably could go back to work as long as the company has a return to work program. Upper right, permanent total disability. That's going to be expensive. That's going to require either they're going to need assistance all their lives because they can't work, and then it'll be supplemented by Social Security payments likely, or work comp is going to pay for the person to go back to school in order to gain whatever degree or training they need in order to get into a new line of work that will give them the same earning capabilities as they had previous to the injury. And then the final one is the permanent partial disability, in which the injured worker will receive a lump sum based on their weekly wages for whatever loss it is. And that's where you can look at that schedule to find out how much it is. And what you'll see is you won't see a dollar amount like in the wage and rate schedule. You'll see number of weeks. So they get paid based on what their wages were prior to getting hurt. They also, because DWD collects all of the paperwork for work comp, they know how much things cost. And so annually they publish this. This is 2018, so this is a few years old because it takes time to process. It takes time for claims to close. Sometimes it takes several years. And so they wait in order to get that information. You can just kind of see, this is more of an overall. I like this one better. So this is like the full report. This isn't hyper accurate, but at least it gives us some insight. So in 2018, there was a little over 20,000 claims. The total indemnity paid was $202 million, and the average claim was about $10,000. And then they break it down by cause of injury, nature of injury, body part, and county. And you can look at that report as well. I find that interesting for my work. The cost of injuries, and this is a little bit older. This is from 2016. You can see the overall impact of injuries and work comp here in the U.S. And this is a chart that I found that who bears the cost of worker injuries. You can see work comp is about 21%. You got the others here. 50% out of pocket by the injured, by the family of the injured. And that's why they have products like Aflac, the goose, I guess, over there on the left, is that an individual can purchase, along with home insurance, car insurance, and umbrella policies, you can purchase Aflac, which is a product for the individual to purchase, which if they were to get hurt at work, you're still getting work comp from your employer, but now your personal insurance will provide you with money for whatever you're purchasing, mortgage, groceries, things like that. It's sort of an addition or a complement to work comp. I posted a few fraud videos for you so you can see what it is. It shows right here, it doesn't happen a lot, and it doesn't really affect the system too much, though there's an indication here. It costs each individual about $900 a year. Fraud does, that's an estimation. And that goes into increased insurance rates, increased healthcare costs, and revenue stolen from businesses. That's probably a high estimate. Again, it doesn't happen that much. The different types of fraud, you could see it here. The employees can commit it, employers can commit it, healthcare providers can commit it. If you get caught, you can go to jail. And that's, I think, what you'll see in those videos. So this week, again, this is like a semester course compressed into 25 minutes. Sorry I went so long this week, or for this lecture. I love this topic. It's one of my areas of expertise. Please read Chapter 8 in the Admin and Programs textbook. Got the study sheet here to help you with the quiz. And then I've got some stuff I want you to look at. I actually want you to read these things. And then I've got a lot of great links for you, and here are the videos. So please check into those. Just a quick review. What is work comp? It's a state law. It requires businesses to purchase work comp insurance, which is a shared liability. The basic idea of the assurance is exclusive remedy, no fault, no sue. In Wisconsin, we will look to the Department of Workforce Development and the Wisconsin Compensation Rating Bureau. which also and also chapter 102 and chapter 26 or 626. I think that's what it is. You'll have to look that up. Annual policy premiums are set by WCRB. The EMR is the key to savings. All workforce injuries must be reported, and I want you to know which form has to be filed. It's the WKC 12. Work comp benefits include medical loss, wage, rehab, death, expenses as well. Yeah, you get actually compensated for, the gas or mileage to and from treatments, just so you know. As far as other benefits, I want you to look at the charts and the schedules, and then look at the stats, cost impacts, and fraud. So that's really everything. Again, I'm sorry this was so long, but I hope this was really interesting to you, whether you're a business student, HR student, safety student, or other. I mean, work comp is part of our lives no matter what you go into.